Good morning, traders. It's 8:04 a.m. Chicago time on Tuesday, the 31st of October, 2023. Thanks for joining me. Apologies for the delay. Lost 4 minutes there. This is episode number 2564. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're looking at a market that looks very similar to what we saw yesterday. We had some further decent numbers coming out of Europe. French GDP came in line. Inflation was slightly better on a month-to-month basis, year-on-year in line. We saw GDP growth out of the Eurozone coming off a little bit, but the inflation rate out of the Eurozone was much better. Year-on-year flash was expected at 3.1 to 3.3, came in at 2.9, making the next ECB decision interesting. Core inflation came in at 4.3 versus 4.3 in line. The U.S., we got employment costs at 8:30. Employment costs, it shows wages increased by 1.2% versus 0.8 expected. A bit of an inflationary tilt there. Employment cost index Q on Q, 1.1% versus 1% expected. We also got Case-Shiller just a couple minutes ago. Case-Shiller came in at 0.5 and 0.4 in line for as far as home price. Home prices month on month, and 2.2, which is a lot harder than the 1.6% for home prices year on year. For the rest of the day, we're looking at Chicago PMI, which comes out to subscribers at 942. To the rest of us, peasants who don't buy this private number, it comes out at 945, expecting 45. We do get consumer confidence at 10, expecting 100, and then after that, the API crude oil stock change, and so on and so on and so forth. The big number tonight is the Caixin manufacturing PMI out of China, expecting 50.8. That comes out at 9:45 p.m. Eastern U.S. time. In case you happen to be sitting at your desk or trading, pay attention to that number. The S&P conditions, the auction condition is multi-distribution in the overnight session. Very clear double distribution profile. We've had multiple days now, multi-distribution profiles. The market is actively seeking value. The inventory is only 15% long. The range is 33 points. And the point of control is shifted up from 41.61 yesterday to 41.95. Here's what I outlined yesterday. This is part of yesterday's Trader Bite. Let's see. Maybe there's a better image of it. I guess not, but that's about as good as I showed it. The primary expectation yesterday was for us, given that we remained above this 41.46 area. If you recall, this was the single prints, the low volume node, and then Thursday's low. As long as we stayed above it, is what I said, as long as we don't open and sell off through there, we're very likely to end the one-time framing down, take out the 76.75, and go to about 200. This is a double O right there. Here's what the market actually did. So yesterday, an interesting open. It was basically an open drive type open. The low print was the opening print. Very strong indication not to be short. Open drive up, and it squeezes to 41.84. What was interesting also is that right away you could see that the underlying was really weak. Here's an image of this is what's called the breadth, or some of you call it advanced decline, advanced versus declines. This is a New York Stock Exchange index. It's calculated, and it's the number of stocks that are above their prior close minus the number of stocks that are below. This is again called breadth of market. And as the S&P was pushing higher, this thing was going straight down. So that initial push in the S&P could be seen early on that it was not very well supported by the underlying equities. That is not a good trading signal, by the way. You don't want to initiate trades off of that kind of information. But it does give you an idea of what kind of participation we have in the overall move, right? So as this thing was pushing up, breadth was pushing down. It got to 84. It took out the overnight high immediately. That was completely expected, and then it came back down, and it created this muddled up kind of IB low, poked through the IB low a couple of times. Looked like a pullback for a continuation right here against the RTH levels, and then it just could not push any lower. So you had a higher low. Then it just got really murky until about 12:30 Central. Once 12:30 Central came in, we had some pretty good sweeps up, and we went neutral on the day. We managed to get up into the 41.9750. Remember, we were expecting double O yesterday. 41.9750 before it fell off, and it looked like a neutral extreme up close, which would be quite directional. You want to see a neutral extreme up close, or day type at the bottom of a swing. This indicates that the sentiment is shifting, and it indicates that the low may be secure. It didn't quite do that. It didn't finish in the upper quartile away from the IB. Technically, it is a neutral extreme up day, but it just, the way it closed, it didn't show strength on the close. So from there, we basically pulled back to yesterday's open, and then have been pushing higher, and then we end up with this multi-distribution kind of profile here. This is a guy's nose. Anyway, so that's where we are. We have a weak high this morning against the 4200. We're really knocking on the door of the 4200 here. We're holding above full session VWAP. We're trading around the overnight point of control. Again, we have a line in the sand here at settlement. So as long as we hold settlement, the area that we're concerned about is right here. This is the low volume node in the overnight session, and settlement. So we opened, we pushed almost to settlement, sold off, pushed above settlement, pulled back to that early high. Pulled back to that early high, and then we push to the high, and we have a weak high. So to me, this looks a whole lot like the settlement price around yesterday's IB and yesterday's settlement, 41.84.85. That's your LIS for today. So what the heck does that mean? It just means that we have an early yardstick, an early boundary that we can measure the strength of buyers and sellers with. So as long as we open and we don't breach this 41.85.84 area and stay below it, then the high is likely to go, and then we're looking for a push into the 42.07 to 42.09 area above, which is still pretty tight. The extended target is around 42.22. Okay, so the expectation is we take out the 4200, we base, and then we start to continue to run. The issue here is that, this thing, although it runs and buyers are holding new territory against sellers, or higher territory against the sellers, they're giving it up on the close. They're pretty consistently giving it up on the close. So with the range expected, yesterday's range was basically, what was it, 41.52 to 41.97, giving us 45 points. I talked about yesterday, most likely giving us about 40 points or so. That's what we have to work with. So if the 41.85 area holds, the best we're likely to do is this 22 in terms of range here. If it doesn't hold, so the primary expectation is open, test down. If it tests down, squeeze the overnight high. Very unlikely, less likely to squeeze the overnight low, and then do the dance at the 4200, push into 4209, and then push to 4222 and come back almost to the 4200. That's your primary scenario. Secondary scenario, chop, 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 chop. Squeeze the overnight high, check for liquidity, come back in, lower high, sellers come in, take it back to settlement, so you have a gap to settle trade, and then we start to explore the lower distribution and hold steady here in the 41.75 area and just basically come back to where we've been for the last couple of days in terms of balance. 41.60 is the key target below, really, but I don't believe it'll get there. 41.60 being the key target below. Okay, so those are the two main scenarios here. The market has to prove what side it wants to be on. There were a lot of clues. There's some pretty decent setups yesterday. You had to be really focused. Like, you can't be staring at Twitter and so on and so forth. It's just very, very easy to miss these quick order flow based entries in the direction of the bias. Look at what Crude has done. Brutal. Crude, which we talked about it yesterday, the way it was set up in balance. Crude ended up pushing lower. Closed almost all of the single prints from way back here, from the 12th, and then held steady. And then this morning we opened right in the middle, and if you look at what it's done, it's extremely sideways. I mean, Crude, as I said yesterday, you don't want to get too aggressive with your targets and so on. With Crude, you don't want to hold extended targets and so on. The overnight session just absolutely did nothing. I mean, it tested the settlement price right here and then just crisscrossed the full session VWAP, full session mid, and is opening right on top of the overnight point of control. It's just a mess, Crude. But don't let that fool you. When the market's in balance, the next thing it's likely to do is fall out of balance, and that's where the opportunities lie. So as it compresses, as it balances, as it looks like it's boring and I just got to go find something else to trade, just as you turn your head away, it's very likely to push through. Okay, so that's that. Crude. And then NQ, surprisingly mild movement to the upside yesterday. So with the inside day, instead of a lower high, lower low like in the S&P, with it opening basically at the upper end of Friday, it was clearly, as I talked about yesterday, it was very obvious that NQ was going to take out the 14,407, and I had set a target for NQ up here at the 600, and it just was so lackluster. I mean, it's just like very poor performance for that product yesterday. very poor performance given that it's actually relatively stronger than the S&P. The S&P managed to push a little bit farther than the NQ did. To me, the way this NQ was setting up with an inside day and a breach of the high after one time framing down, to me, there's a lot of pent up energy here for a quick spring higher. I know that Apple is on deck for this week, and it probably has a few players nervous in there, but still, it's just really poor performance. I found NQ to be a difficult read yesterday. Couple things. There's natural gas. By the way, natural gas is, they're announcing a micro NG. I think, don't quote me on this, but I think I saw a notice from CME yesterday that they're releasing micro natural gas. I believe it's financially settled as opposed to physical. And it coming out on Monday's session, which starts on Sunday night. Both the micros and the options creates an interesting product to look at. One more note. Sunday, the U.S., Europe has already jumped into standard time. The U.S. is off of Europe by an hour. This Sunday, we switched to standard time in the U.S., so just remember that if you're trading, European products that are in the U.S. or foreign products while you're in the U.S. We do switch to standard time this weekend. RTY, I mean, it's still one of the weakest products out there. It's still tracking bearish. I'm seeing excesses in the RTY. It's tending to leave excesses at the top. These are not so great for longs. When you have an excess like this, it just basically means that the price is too expensive right off the bat. So to me, these 2 days are completely balanced with each other. So it deserves a composite here. These 2 days are completely imbalanced with each other. They deserve their own composite. Yesterday, it pushed back to this point of control, which was tested on Friday, to retest it again yesterday. So you have a bit of a double top at 71, and I'd keep a very close eye on that. By the way, when you have an excess like this, let's pull this up. When you have an excess like this, one thing to monitor for is when the market starts going into the excess. So you want to pay very particular attention to this 6230-ish. Once you get into an excess and extend and have a range extension for this product, I think it's 6 ticks. So what is that? So essentially, anything above 1663 is very likely to test 71, setting up a classic kind of market profile long there if this happens to start to move back up. But most likely, it's contained. We had an inside day yesterday, very likely to get an inside day today. We have FOMC coming in tomorrow, so there's not likely to be huge commitments on any products until the FOMC tomorrow, so just be aware of that. Okay, good luck, and I will catch you tomorrow morning. Take care.